I'm Susan Dziubinski with Morningstar. Today we're talking about 3 stocks that 2 of the best active fund managers recently took positions in. Morningstar thinks all of these stocks look undervalued today. The team at Diamond Hill Large Cap Fund takes a disciplined, bottom-up approach to finding companies whose stocks are trading below their intrinsic values. And the team sells those stocks once they reach their intrinsic values, no matter how much they may still like the business. The managers favor companies with stable cash flows and defensible competitive advantages. They recently added Adobe and General Mills to the portfolio. Adobe has developed the most comprehensive portfolio of tools used in print, digital, and video content creation. And the company's artificial intelligence solution, Firefly, should also attract new users. Morningstar thinks Adobe has carved out a wide economic moat, which means we think its competitive advantages will last for 20 years or more. Adobe stock looks undervalued today. General Mills is also known for its portfolio. In this case, it's a portfolio of top-selling packaged foods brands, including Cheerios, Pillsbury, and Betty Crocker, to name a few. The company has done a good job of investing in research, development, and marketing, which has allowed its products to sell well and continues to enhance the company's relationship with retailers. Morningstar thinks General Mills has a narrow economic moat, which means we think the company will remain competitive for at least the next decade. General Mills stock looks undervalued today. Another top-notch fund management team, Bill Nygren and his colleagues at Oakmark Fund, also picked up an undervalued stock recently. At Oakmark, the managers favor large cap stocks trading at least 30% below their assessment of intrinsic value. The team focuses on companies run by managers who think like owners. So, what stock did the Oakmark Fund team buy? They recently initiated a position in Constellation Brands. The company is the largest provider of alcoholic beverages across the beer, wine, and spirits categories in the U.S., but it generates the bulk of its revenue from Mexican beer imports, including top-selling brands Modelo and Corona. Morningstar thinks Constellation Brands has carved out a wide economic moat, and we think that beer innovation and distribution gains will return the company's sales growth to a mid-single-digit rate over time. The stock looks cheap relative to Morningstar's fair value estimate. For more stock ideas, visit Morningstar.com.